What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Weeble is going to give you up to 12 free stocks when you open a new Weeble brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of the video. Go click on that Weeble link. Open up that new Weeble brokerage account today. Go get that free stock. Go get that free money. So I'm scrolling through YouTube and I run across one of the channels that I really enjoy watching. And the creator of that channel is Graham Stephan. And the video I decided to click on was titled, "Why You'll Regret Buying Stocks in 2023. So that sounded pretty interesting. So let me dive in here and take a look. And in that video, Graham was talking to his 4 million subscribers about some mistakes not to make if you're going to invest in stocks in 2023. And I thought to myself, you know something, that's pretty good stuff. That's something I want to share with my audience as well. So here are the 5 mistakes you should make if you're going to invest in the stock market in 2023. Number 1, don't invest short term. See, guys, right now we're in a pretty volatile market. Stocks are up one day, they're down the next day. But when you look at it over the last year, they're down. And the reason they're down is because our economy, because of high inflation, because of high short-term interest rates. 99% of retail investors should be investing long-term. Short-term, you really got to know what you're doing, guys. And you really have to have a skill set for that. I certainly don't have that skill set, so I don't try to invest short-term. Because more times than not, if you're investing short-term, you're probably going to lose money. And really what we want to do is invest for the long term. And we want to take a certain amount of money every single month or every 2 weeks or every week and dollar cost average into our favorite companies and our favorite ETFs for long-term growth. Now, the stock market has a history of really multiplying money and building wealth if we do it right long-term. So I agree with Graham on that one. Do not invest in the stock market short term. The second mistake I don't want you to make is don't go all in. If I got $1,000 and I want to invest it in the stock market, I don't want to take that $1,000 and invest it all at one time. The company that I invested in or the ETF I invested in goes down the next day. Now my whole $1,000 is in at one price and I can't take advantage of that stock going down even further. So what I really want to do is take that $1,000, at least this is the way I would do it. I'd take the $1,000, but I'd take $100 a day or $100 every time the market is red, and then I would invest over the next 10 days, right? So now all $1,000 is in the market, but it's over a 10-day period. So I can take advantage of if a stock or an ETF is continuing to kind of slightly decline, I can just kind of buy down the dip. That's what I would do, guys. I just think it's a safer way to invest. You get a lower cost per share average over a 10-day period than if you took that $1,000 and dumped it all in at once. The third mistake you don't want to make is to follow others. You really want to analyze what your goals are as it relates to investing in the stock market. Right. I may listen to people on the internet. I may read some articles. I may even listen to a family member or neighbor, but I will not allow them to influence the way I invest my money without me doing my own due diligence. And that's really what I'm trying to get you to understand is you have to do your own due diligence. Again, we don't want to be the expert, but we also want to have some knowledge of what we're putting our money into. We don't just want to invest in something because someone told us it's a good idea to invest in it without us doing any of our own homework. So please, before you invest in anything in the stock market, get out online and do some homework. Do your own due diligence. Do your own research. And then if you feel good about it, go ahead and invest. The fourth mistake you don't want to make is you don't want to try and time the market. So timing the market would be simply this. I got $1,000 and I say to myself, you know something? I think the market is going to go down even further. So I'm going to wait. I'm going to wait till it goes down even further. I'm going to keep trying to wait till it goes all the way to the bottom. And I never invest my money. And by the time I think it's already at the bottom, it's already starting to go back up, which in my opinion, you just missed it, right? But if I just time in the market through dollar cost averaging, then I would take that same $1,000, like I said earlier, and then I would just say, well, okay, for the next 10 days, I'm going to put $100 in, right? Every time the market's red on my favorite company or my favorite ETF, I'm going to buy $100 worth. See, that's time in the market as opposed to time in the market. Like I said, statistics tell us people who try and time the market don't do as well as people who have time in the market through dollar cost averaging. So always time in the market, don't try and time the market. And then the fifth mistake you don't want to make is you don't want to be emotional, right? We don't want to let fear or anger get in the way of us being a good investor. Because guess what? Some days we're going to look at our portfolio and it's not going to look good. It's going to be red. It's going to look like our investment is going down in value. And if we let fear jump in, we may be tempted to sell everything, try and save what's left. But anytime you sell, guys, you lock in that loss. You're done. It's over. You can't get it back. As long as you believe in the company, you still believe in the ETF, and it gives you the ability to make money long term, then stay the course. Don't allow anger or fear get in the way. That is the 5 mistakes you don't want to make when you're invested in the stock market. And I get that from my guy, Graham Stephan. Guys, go check him out. He's a really good YouTuber, really good financial information, and has done extremely well at a young age. Certainly my spin on investing slightly differs from his, but that's okay. We all are out here, hopefully trying to help you guys get to and exceed your financial goals. So drop me some comments and let me know what you think about those 5 mistakes you don't want to make if you're going to invest in the stock market in 2023. I think you definitely should be investing because it's a great time to buy some of the greatest blue chip paper assets at a discount. They're trading at a discount. And the goal is what? We want to buy these paper assets at a discount, and then we want to hold those paper assets till they trade at a premium again. And then at that point, we have the opportunity to do what? We can sell them, take our profit, or we can allow them to continue to grow in the stock market. And at some point, if they grow large enough, they may produce enough passive income to take care of us, right? And that's the goal. We want to get to financial freedom. And I think paper assets can help you get there, but you got to do it right. You got to be in it for the long term. Can't be in it for the short term, right? We can't be doing that stuff. So those 5 mistakes that I talked about, keep those in mind the next time you're ready to jump into the stock market and buy an investment. If you want those 12 free stocks from Weeble, click on that link down in the description box. You can certainly buy ETFs and individual stocks with that Weeble app. I use it every day, guys. Pretty good, useful, self-directed brokerage app to use. And no fees, no commissions, that kind of stuff. So click on that link, open up that new Weeble account today. They're going to give you up to 12 free stocks. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.